The housing market is on the verge of collapse, and it appears that there is also going to be a huge economic breakdown. Blackstone, a financial behemoth, has for long been accused of rigging the world by its desire to profit, a strategy that has always revolved around poverty. At the moment, things have already started going south for Blackstone, and it is on its last string to collapse. In today's video, we'll be diving deep into how Blackstone has been operating illegally, what is making it collapse, and how its collapse will affect many people in America and the world in general. Just make sure that you stick to this video till the end, so that you don't miss a glitch in this breaking news. Blackstone's operations have evolved around buying as much real estate as they possibly can. They take out hundreds of billions of dollars worth of loans at rates cheaper than any individual has ever had in American history, and buy your home. They have dominated this market because it's just not possible for any ordinary person to compete with these trillion-dollar institutions. Blackstone, though, has already started to face turmoil, and they are already on the brink of getting broke. In November last year, investors tried to run to their doors, and because their flagship fund is fast disappearing, they resorted to just saying no to their investors, and even telling them that they can't have their money back. These investors have therefore just decided to sit tight and hope that things will get better. Sadly for them, this is never going to happen anytime soon, and Blackstone has continued to further get into a worse state to such a point that they can't even pay their debts. Interestingly, the mainstream media has never had the balls to report on these events. But the question is, what exactly is going on here? You first must acknowledge that everyone in the legacy team is against you, and the mainstream media is not left out on this. Blackstone is a gigantic financial institution that controls over $1 trillion assets, and their customers are mostly billionaires and bankers. But also there are around 31 million ordinary Americans who likely have no idea that they are Blackstone's customers. These people are simply invested in a pension scheme that has secretly been run by Blackstone without their knowledge. Blackstone's flagship product is a real estate investment trust, or simply call it a REIT, which just buys up property and rents it out, and currently has $125 billion worth of assets and over $55 billion worth of debts. A couple of months ago, we started getting warning signs that things were not so well inside this REIT, as Blackstone sent out a letter to their investors explaining that they are seeing a few problems. They essentially communicated out in November that they would no longer be able to take out their money no matter how badly they needed it. Blackstone has since kept its doors closed from that moment henceforth. It has already been 4 months and the doors to Blackstone have remained shut. All this long shutting down of its doors was because the REIT, its most important invested product, had terribly failed. Blackstone has been suffering from a sustained bank run that has no end in sight whatsoever. But this is where things have really gotten seriously bad. It has even gone ahead to tell its clients that they won't or will never pay them their money because they have been allowed to close and there is nothing its customers can do about it. It failing to pay a loan is one thing, but Blackstone fears that all it is doing is default, and that is just something that they don't want to hear. Unfortunately, that is exactly what happened. Blackstone just defaulted a $562 million bond that is backed up by a huge portfolio of European stores and Finnish offices. They even sought an extension on their debt because they realized that they were incapable of actually paying out the loans and debts they had. But bondholders decided not to allow it, to call Blackstone's bluff, and try to make them pay immediately as they are legally required to. But the problem is Blackstone just can't pay their debts because they were broke. Funnily enough, they are trying to gaslight the world into thinking they don't have any problems, but the truth has finally started to get out, and it doesn't look good at all. Blackstone has been claiming that this doesn't really matter because it's such a small part of its portfolio, so all is well. But this has left many lingering around with a common rhetorical question. If it's such a small part of its portfolio, then why is it not paying out its debts and loans? According to Bloomberg, this default stemmed from the European property market, but the valuation drops in the United States have been far more severe. Now, the truth of the matter here is that Blackstone is falling apart, and as we speak, the impacts are thoroughly going to be felt. Already, they have defaulted many loaners, and that not being enough, there are 31 million American pensioners relying on Blackstone for their retirement every single month. and the institution is saddled with billions of dollars of debts and assets that are falling in price, thereby putting them on a collision course with a total and utter collapse. It's not surprising at all that the majority of investors are struggling these days, with the vast majority of people losing their money over last year. And with the amount of debt in our economies, interest rates hiking, and inflation staying stubbornly high, we are going to see a recession, and asset prices are going to continue to get hammered. Over the last 6 years, Blackstone has outperformed every other REIT in the world, and even though it's very large, it is no different from any other competitor. If you are investing $2 million into a property, it's easy enough to find the best possible opportunity and only invest into that point. But when you are investing $125 billion into a property, it's simply not possible to pick and choose only the best projects. And so all these see their returns mirror each other at this scale. It turns out that Blackstone have been providing huge returns to their investors because they get to decide how they value their property holdings. Every quarter when they speak to their investors, they get to choose how they value their assets, and there is no real market to compare these levels because in this case, we are talking of a single billion-dollar building and not something as liquid as stocks. Just to give you a simple example, if Blackstone says that the building they bought for $2 billion in 2019 is worth $4 billion today, then that's what they will tell the investors. This is because there is no governing body to check if the valuations are accurate, which has actually been a big mistake. Over 2022, commercial property prices rose by about 8% across the entire American country, but Blackstone claimed their property values increased by 13% in 2022's year-end stockholder letter, that interestingly has been brought down from the company's website. Blackstone has also been claiming of having incredible returns over recent years. Ironically, it has been unable to pay off its loans and debts. Maybe this is because rumors of fraud have started to circulate this behemoth, and the optics of all this just continue to get worse because it turns out Blackstone paid out its CEO and founder, Steven Schwartzman, a record $1.27 billion just a few weeks before the company suddenly couldn't afford to pay out $562 million in debt that it owes. As it is assumed, that scenario of 2008 seems to be repeating all over again, where bankers get richer while their investors get poorer. Blackstone is just proving it right before its debtors and loaners. Blackstone's failings are just a single piece of the pie in a massive failure. We have property collapse not only in the United States or Finland with Blackstone's defaults, but this has cut across all of Europe and China as well. There is a sudden monetary tightening that is going on all over the world currently, at the same time as inflation is a worldwide problem too. The 2 to 10-year yield curve, one of the most reliable recession indicators the world has ever seen, has not been this inverted since the 1980s, when bond yields went wild as inflation and interest rates reached close to 20%. What we can only be sure of at the moment is that a great recession is guaranteed here, and sadly it seems that we will be the ones to lose out. What are your suggestions about this? Please don't forget to leave your suggestions in the comment box below for us to see your views. With that being enough for today, this marks the end of our video. We hope you guys enjoyed watching this video, so don't forget to send us those likes. Also, remember to subscribe to this channel if you are new here, and don't forget to hit the notification bell so that you are notified in case we upload a new video. Thank you for watching, and let's meet in our next video. Goodbye.